Let's just start with the operating profit. Decreasing 14% in the North American beverage unit. Can you just walk me through the cost pressure there, how you're absorbing those costs, and what your plan is for the rest of the year?
Yeah, if you look at North America Beverage, in the quarter, it was actually a very good story. We saw a turnaround and the business getting back to growth, grew 2.5% on the revenue line. Profits were down, driven by two things. First and foremost, advertising and marketing expense was up. Frankly, we were responding to increases in competitive levels of spending and felt we needed to increase advertising in order to be competitive, particularly in the big brands, Gatorade and Mountain Dew and Pepsi. And then in addition to that, a bit of inflation from two places, one, aluminum, and second, transport costs. This is primarily the driver wages that we use as a result of moving product around on common carriers. In response to that, you'll see us, and we have already taken pricing up in the fourth quarter, beginning in September, which should improve the profit outlook for that business going forward.
Just in terms of improving the operating profit, it should improve. Hugh, the organic revenue growth is pretty impressive. And I'm just wondering, if you're passing on the costs to the consumer, do you have that same enthusiasm and optimism about the revenue growth?
Yeah, we do. I mean, this was a remarkably good quarter. I would say that the overlaps in the fourth quarter get a little bit tougher. But we did increase our revenue guidance today because we are feeling confidence that, in fact, we're getting the North America beverage business back on track, and it's a big piece of the overall revenue. The balance of the company, the revenue growth is strong and has continued to be strong quarter after quarter, whether it's international at 9%. Frito-Lay is the most consistent consumer product company out there and continues to perform revenue at a very strong level. So we do feel good about sustaining the North American beverage turnaround.
Hugh, I do want to touch on the FX headwinds. FX headwinds, they come and they go. They're clearly pretty present in this press release as we look at the earnings in the last quarter, and they're pretty present when we look at your guidance for the coming quarter and the rest of the year as well. How do you manage this? Do you hedge out some of the FX risk at PepsiCo, or do you just let it come through and let it go?
Yeah, we separate it. In terms of transactions specifically, we will hedge. So if we're moving commodities or other items cross-border, we will hedge those. In terms of earnings translation, we don't, because frankly, we think it's bad for shareholders and bad economics. So the way the year is played out, the dollar was about a 2 percentage point tailwind in the first half of the year. It was about a 2 percentage point headwind in the third quarter. And the fourth quarter, right now, the consensus rates lead us to expect about a 3-point headwind. So when you put that all together, previously we're expecting flat. Now for the year, it'll be about a 1 percentage point headwind.
Hugh, just to get out of the weeds and look at the broader trends in this industry right now, it seems to me that a lot of people are looking for acquisitions for growth. And what's interesting about this release this morning is that you have some pretty strong organic revenue growth, and unexpected to some people at least. I'm wondering whether you think the acquisition for growth story is a little bit overdone in this space at the moment.
I think there are a lot of companies out there right now that are seeing the deficiencies in their portfolio, and they are using acquisitions in order to fill in those deficiencies to try to catch a growth wave. The good news is, from a PepsiCo perspective, we've been fairly proactive about this, whether it's getting non-carbonated beverages, whether it's getting our geographic portfolio more filled out with exposure to higher growth developing and emerging markets. So as the prices have risen on those assets, we've been relatively quiet on the acquisition front. Now, the one thing that we have done most recently was a SodaStream acquisition. We're in the processes of getting that approved right now. But we look at that as a completely different incremental new platform, in-home beverage creation, which frankly we didn't play in up to now. So while the price was high on that one, certainly the performance of that business we'd look for it to be justified.
So Hugh, just in terms of how wide the net is cast, it sounds pretty narrow at PepsiCo. There's a discussion of cannabis-related products at other beverage companies. There's a discussion about Coca-Cola and Costa. Just how narrow is the net cast over at PepsiCo?
Yeah, look, at the core, we're a snack and beverage company that is trending towards healthier products over time because that's where consumers are going. So anything that falls into the space of snack and beverage, we're clearly going to be interested in. But it's got to make sense from the standpoint of fitting with our capabilities. It's got to be on trend with consumers. It's got to have growth prospects that look outsized. And frankly, as we go through those screens, we see very few things that sort of match up against all of those screens. And as a result, we're very disciplined about the way we manage capital.
Hugh, in many ways, it's been the year of the CFO in the United States of America, adjusting the balance sheet for tax cuts, some people running a more aggressive balance sheet. If the incoming CEO at PepsiCo decides to pursue growth through acquisitions and leverage the balance sheet, are you confident doing that? Is it there? Is it available at PepsiCo right now?
Yeah, the limitation on PepsiCo in terms of doing deals isn't capacity. It's we only do things that create value. So I won't speak for the incoming CEO. He should speak for himself. But PepsiCo has been very disciplined about capital allocation for a long period of time, and I expect that'll probably continue.
Well, just as one final additional question, the company has a pretty solid investment-grade credit rating. I'm just wondering whether PepsiCo has used any of the overseas cash available to pay down some of the debt and reduce some of the leverage to some extent, Hugh. Is that happening?
Yeah, we have. We brought back about $5 billion. Our net debt has remained roughly the same, but we have paid down debt a bit over the course of the last 9 months.